Check. Spitting with a vengeance, no repentance, and it's for my descendants. Don't be out here in these trenches, cause these trenches turn to ditches, and these ditches turn to prisons, and you lose your independence. But I can't lie, it's stupendous. Running wild and sipping Guinness in the cup with all the misfits. I just made a few of them some millionaires. I had to burn a few of them, they didn't care. I had to earn a few of them some clientele. But still we broke the bank, so don't you dare. Tryna knock me on my path against foul, no rap. Knew this life was hard, so I'm taking no steps. While I'm light years ahead of you and I fear no death. But I'm far from invisible, if not hold that, hold that, hold that, hold that, hold that. Keep on going, even though my pain shows I'm focused, even though the flames glow, I'm frozen. I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames glow, I'm frozen. I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames glow, I'm frozen. I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames glow, I'm frozen. I be burning all day and I keep on. And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statman.
All right. Good morning, everybody. Good morning, Mickey.
Good morning.
Let's get everything set up here. Good morning. Good morning. If you guys are coming here for the first time, let us know where you're watching from. Let us know if you trade New York, trade London, trade Asia, what the heck you coming here for to trade. Good morning. Good morning. All right. We got Ape. Good morning, Ape. We got Pack. Good morning. Don't think I've seen you here before. Son, Soon. Good morning. What's up? What's up? We got EP. Good morning. Wes. Good morning. Julie. Good morning. Paul Travel. Good morning. Paul, I think I recognize you, actually. I knew I recognized your name from somewhere. You haven't been here in a while. Good morning, dude. Vlad, good morning. Landy, good morning. Pack is really digging the song and Jake's song. Don't forget to like. Yes. All right, if you guys get value from these streams, we do them every Monday, 8:20 a.m. EST. And then on Friday, we do the analysis portion. And then Tuesday through Thursday, my buddy Mickey here, he's coming in and he does his really quick war game. So Monday through Friday, we got some piece of content that you guys can see of how we trade, how we align live price with statistics, how we trade with statistics and live price. Morning, Shag. Morning, Dark. All right, we got a lot of people in here this morning. Sweet. All right. Okay, so I'll get into a little bit of what I'm seeing first, and then I'll pass it off to my buddy Mickey here, and he'll kind of he'll give his piece, and then that'll get us right to around market open. So the first thing that I'll always do is I'll hop on to the 60-minute chart, and I will see where the footprints are to give us, are we going to potentially mean revert, or is that going to be an area that we break through and we fail to mean revert? So that is my footprints. So if you can see right now, we are above midnight open. We are above opening prices 1 through 7. So if we're above a lot of things that statistically get retraced more than they don't, you can even see in the past 1,000 days for the midnight open, we've retraced it 67% of the time. So 67% starting at 8 a.m., we come down to this little yellow line right here. And so in addition to that, I want to see, well, where's the catalyst? Where is the area that we could potentially have some sort of sell pressure because we're above midnight open, we're above the statistic that gets us to that area? What does that look like? This is the first footprint that I would see, and that's simply just wicks that haven't been tapped into yet on the higher time frame. And then we have this huge sell-off that we did on Thursday last week, and then we got some crazy footprints up here. So I can have a pretty good assumption that if we can't have that sell pressure, that mean reversion, whatever that catalyst is around this area, then we can, we have this giant void right here of no wicks, no anything, that then this breaks my, my confidence, my context, whatever you want to say, of this is where the sell pressure is going to start to then get us here. So then we go down to the 5-minute and I say, okay, I got my footprint. I have where my just objective catalyst could be. And now I want to see within the daily candle, where is the high and the low of day? Because statistically, when we have the high and low of day, if I share my entire screen, there we go. We can go over here to this cool little platform called the Daily Profiler. And we can see that if I put everything and don't put any filter, any session, anything like that, we can see where's the high day, low day times. We can see that statistically there's 3 to 4.
I meant to warn you that we made the update of that. My bad. As you can see, they're stacked high and low.
Yeah. I was getting ready to say, I was like, something looks a little bit different, but
I meant to tell you that we did that update over the weekend.
Gotcha. Okay. Well, that's pretty cool. There we go. See, we're showing off something new. But either way, we can still see that there's 4 major times. Again, the one caveat is news. So you can see right here, actually, you all know, we have that 8:30 news event, whether it's PPI, CPI, not FOMC, non-farm payroll, NFP, whatever the case may be. We have a lot Canadian stuff, right? Those crazy Canadians out there. We have a lot of news that happens on 8:30, but if we don't, the other 4th major time is around 3 a.m. London Open. So you can see we have market open 1800, 3 a.m. market open, market close. These are the major times that contribute to when that high day and low a day on the daily candle is going to be formed. So if we know that statistically, then we can align that with live price, okay? Because the major misconception is that we're just looking at spreadsheets, and if we're above the spreadsheets, we're selling. If we're below the spreadsheets, we're buying. No, we still want to see if live price is agreeing with these checkpoints. And that's all statistical-based trading is.
Let's talk about that real quick, because I think because there's such a big misunderstanding.
Yeah.
Right? Like, it needs to be addressed, right? Number one, why do we use stats to begin with? Well, we want to see, is there edge? Is this true, or is the person on social media pumping it really, is he telling the truth or not, right? Because I'm risking my own hard-earned capital to do that, right? So, number one, you got to use stats to prove people right or wrong. You're risking your hard-earned capital based off of some random dude on YouTube or Twitter. So you might as well use stats to see, is there edge in what he says or not? But then another thing, like the live price component gives permission to the stats to be validated. The live market is telling you this, so what? Show me that you care, market, about this stat. And that live price element is giving you permission to say, hey, we do care about that stat. So let's turn it on.
Yeah, it's kind of like if I make the same analogy. Let's make a new analogy, because I constantly use the real estate one. Let's take you want to sell a vehicle, right? You want to sell your vehicle. You want to go to Kelley Blue Book and see what the value is. How does Kelley Blue Book, because they actually use the black book in the dealers, so it's called the black book in the dealer side, the retail side, it's called the blue book. So how does this platform just does it, when you go to plug in your VIN number and your car information, does it just, it looks pretty good, I'll give you, I'd say it's worth 10K. No. What do? They look through all of the databases that they have of all the sales of that type of car in the specific condition that you have, in the zip code that you're in, how many miles is on the car, blah, 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 blah. Statistically, from data that they have pulled in a matter of seconds, your car is worth XYZ. Every decision that involves a monetary gain or loss in 99% of business revolves you having to understand the numbers. Whether it's you selling something, building a business, investing into something, if you don't have the numbers, how in the world can you know when something is working versus when it's not? How can you know when to improve something versus just understand this is a normal loss or a normal business expense? So the reason why we're so passionate about objectifying price isn't to predict it. It's not to think that we know every little wiggle on this chart. It's to have reasonable expectations of where price is most likely going to go when. Because here's the part that everybody forgets when they hear statistics and they say, Austin, you can't use spreadsheets trading. You can't use just stats trading. When live price is agreeing with the direction of the statistic. Did you hear that? Did you hear that for all the people? When live price is agreeing. I'll give you a perfect example, and this goes into the analysis and the trade ideas for the day. We have an out of statistic hive day at 8:30, unless it's news today. correct me if I'm wrong, Mickey. I don't think we had news, right?
No.
Yeah, we didn't have any news today. So just a normal high that we just made here, going long for New York 1. So this is an out of statistic high of day. And then we have an out of statistic low of day here at 5:30. Again, we can go back to our daily profiler here and we can say, okay, look, this. We don't really have any significance for 5 a.m. being a low of day. Now I'll let Mickey go way more in depth in the variables of today so we can see if is there any nuance to the highs and lows of days we currently have. But as of right now, just the generic times, we don't. So if we know that this is an out of statistic low of that daily candle, and this is an out of statistic high of that daily candle, now I'm going to break down the P12. The P12 is the half of the daily candle, this high and low from 6 p.m. to 6 a.m. It's the first 12 hours of the daily candle, the first half of the daily candle. And so how we interact with the first half of the daily candle, we can have some statistical price movements off of the P12 mid, off of the P12 high. And so right now we can see that in the pre-market, we broke through the P12 mid. We tried testing the P12 high and rejected. And so now if we stay above this P12 mid and get above the P12 high, that's bullish. And so then that would lead me to believe if we're long for New York 1 and we try to get back above the P12 high, that is live price accepting above the first half of the daily candle, which is objectively bullish. And then I would wait for market open to open up. So that's what this zone right here is, the first high and low of the 930 to 931 candle, just the normal range. And if market opens, making a new in statistic high of day, making a new wick to the upside of the daily candle. Then, once live price is agreeing with being accepted below 930, then I have reasonable expectations for checkpoints of price. So then it's just a matter of if we are accepting below where we started opening up the regular trading of the day, then statistics tell me realistic, and this is where I love statistics so much, is it gives us a realistic keyword, realistic. We're not shorting for an arbitrary 100 points. We're shorting for, NASDAQ going to zero. We're shorting with guidelines telling us that in the past 76 days, this level has been hit 88% of the time. Opening price the 7 a.m. opening price has been hit 89% of the time. P12 mid, it's already been hit, but we know that it is a common mean reversion in addition to midnight open, especially post 930. We can see that if we go to the daily profiler here and we want to take a look at the daily profiler levels, and then we go over here to the New York levels, we know that generically midnight open has around a 68.9% probability historically. And this is actually another little thing. This is a completely separate data pool and way of analyzing data as opposed to the midnight snap. And what do you guys still see? I can go to the 60-minute chart and take a look. 67% the past 1,000 days, 4,000 days, 68.9. So this is a very, very good time-tested, time-proven statistic. So then when is this 68.99% at the meat and potatoes of when we majority of the time hit it? That's what this distribution chart shows us. So we have a good statistic, but then mode to median. So the most to the middle of the time that we hit the midnight open is either going to be in the pre-market around 8 a.m. And what did I say? So 8 a.m. is when that statistic starts. 8 a.m. to market open, and we start to dramatically die off by 10 to 10:15. So then how I use midnight open is if we go back down to the 5-minute here. Same thing. If we're accepting, if market open makes a new in statistic with this long false right below us, I can have an extended cash flow short with midnight open, P12 mid, levels 1 through 7 a.m. opening prices, and then all these bearish levels we have here. We have just a bunch of statistics leading us to believe that if live price is accepting to the downside, these are all the checkpoints price could do. And then here's the beauty. Here's the part that gives me goosebumps. This is the part that makes me love what we do. I don't need to be right about none of it. Like, I want you guys to understand that for a second. I don't have to be right about a single one of this. You know why? Because then I take what I do one step further. I don't just trade arbitrarily to a level that has a high strike rate or, a high statistic of occurring. I'm then waiting for many of these reasons for price to checkpoint, and then I'm taking a portion of this move with positive risk management. So I'm waiting, and the reason why I'm drawing this box around all these statistics is I want you all to visually see all the different areas that we have high statistics. Anything above a 50-50 shot's good, right? So anything above 50, it's decent, it's better than a coin flip. And we have all of these reasons above a 50% odd that we could visit at least once by noon. And so if we know that this whole box right here encompasses areas that price could come and retrace to by noon, well, then now I just have to let live price disagree or agree with me, because now we're going to take the other side of the coin. We're going to flip the other side of the scenario. Let's say we do, and you guys, if you follow me on Twitter, Austin or AC_trades, that's it. You'll notice when I give my analysis, I don't just give one trade idea, because I don't have a bias, because this market's dynamic. It's not linear. It doesn't move in a perfect fashion. So why in the world should my trading be the same? Why should my trading be static? So not only do I plan for the foaming at the mouth, beautiful scenario, but what about the other side? What if we start mean reverting pre-market? What if we also don't do any of this mean reversion? That's my trade number 2 and trade number 3 scenario. So scenario number 1 would be the easiest, most beautiful scenario. Market open makes a new in statistic high of day, and a break below it will qualify for an extended cash flow short to all these statistics. Scenario 2 would be if we start to mean revert now, if we start collecting these statistics now, if we go long false now before market open, then I would be looking for, and this is where I'm going to lean heavy on the 5-day, low-a-day projections from the daily profiler, and I'll pass that off to Mickey to show you, and I'll just build it in the back end. But if we do start netting off this P12 midnight open, and we open up the market somewhere here, then I'll be looking for extended cash flow longs for whatever the highs of days that we typically can have for this day. But then I'll also be looking for, if we accept below market open, the rest of the statistics to be taken, if not even a new low of day. Then the final scenario is the true scenario, the directional scenario, we don't mean revert at all to any of these statistics. And because this is also a common signature that when we do make a directional, we call it DMP, so directional with no pullbacks, or DWP, directional with pullbacks for the daily candle. When we do make these moves, typically they're on a true day. And what a true day means is when we take the New York 1 high and we never come back to take this low. And so we're going to be looking and being very, very cautious that if we make a day or we open up the market somewhere around here and we stay above market open by 9:45 to 10, this is going to give me even more of a potential clue, breadcrumb, whatever you want to call it, that we could have some sort of directional for a long true. And that's where I'm turning off my sights at retracing all of these stats, and because live price is disagreeing. So that's why I wanted to make sure you all understand, yes, statistical based trade gives us probabilities of where price can go, but we can also use these high probabilities on the other side of the coin by focusing on what does it look like and what price do typically when we fail to do what we do 80% of the time, 73% of the time, 68 historical percent of the time. What does it look like? And this right here is the common signature. When we have a lot of statistics that are stacked in a single direction, in this case it's bearish, but then by 9:45 to 10, we fail to even get below 9:30 to start mean reverting to these statistics. So then scenario 3 for my trade idea is if we break above 9:30 and I take a long position and start scaling into my long for an extended cash flow trade, and if by 9:45 to 10 we're staying above it, we're even potentially making new highs, I know that I'm on the right side of the market and that potentially this is a failure to mean revert style day. And that is my day. Is it my internet or Austin that keeps causing random spikes? So, funny enough, I haven't had a single issue. Knock on wood.
I think you're doing fine. I haven't seen any spikes. That might be usual.
Okay.
But I wouldn't put it past him. I'm taking his side over yours.
All right. They said, AC, when you have time, please tell us about when you hung out with ICT. I'm not an influencer, by the way, but yeah, we'll talk about it after we do our analysis. I'll let Mickey do his analysis and stuff. We'll definitely talk about it. It was fun. So you guys don't know, I got to talk to Michael and Pax over the weekend. It was pretty dope. But yeah, we can talk about it more. All right, Mickey.
All right, let's get after it. Let me share screen. All right, cool. So first and foremost, starting on the daily chart.
Mickey, you muted yourself just as you started.
All right, well, thank you. Can you hear me now?
Yes.
Let me make sure AirPods are selected. Yep, AirPods are selected. Cool. All right, so we know that when we're above NFP Friday previous month 50%, we expect 30% green days. 70% green days, 30% red days. When we're below, like we are now, we expect 50-50, right? So we know that, like, when we're above, if you're a higher time frame trader, trend-like models work better. If you're below, reversion to the mean-like models work better, right? Because you get a 50% red days, 50% green days, right? So we're expecting 50% red days, 50% green days from the daily chart. Now, how does that help us intraday, right? Well, when we're above NFP Friday previous month 50%, we get a lot of edge intraday because we know that if we see a low of the day at 1800 to 1900, 03 to 04, 0930 to 010, then more than likely it's going to be a green day and we're going to expect end of day closes. So we can just turn off all shorts and, just buy dips, right? So we're not in that market environment. We're in a 50-50. So you have to be a little bit more disciplined until you find that exact high day, low day, right? And then you can turn one direction on or off, right? So using candle science, right? We decide build a system that can take the open, high, low, close. Like what daily profile does, it says based off of what Asia did, based off of what London did, what are the probabilities of previous 12-hour high, mid, low? What's the probability of midnight, low, VIX open, settlement, RTH levels? What's the probabilities of high day, low day? What this system does is it says based off of, we're going to say NQ, we can choose the daily, we can do this all the way down to the M45, all the way up to the monthly, right? Today, we're going to do the daily. We can pick all the way up to 6 candle look back, we're going to use 3, right? We're going to say based off of what Thursday did and what Friday did, what is the probability of this high or low getting hit? And then where's the invalidation of this probability? Now, us at the daily profile, we've already done all the hard work to figure out statistically where invalidations are for probability. So let's look at this, right? Based off of Thursday, based off of Friday, based off of Friday closing, going below the previous day low, but closing above as a green candle, right? We can see today, previous day high has a 79% probability of getting hit versus previous day low, which has a 22% probability of being hit. Unless, right, we get below that previous day opening price, right, which is right here, right? So we know that the high probability move is that we take out previous day high. We've known this since Friday, right? We know the low probability move, as long as it's open, is secured and not touched. The low probability move is the aim for previous day low, right? We know we're in a market environment where daily candles are 50% red, 50% green, right? So now, let's see what happened to these stats the moment we touch that low. Did I do the right one? Below. Yeah, I did the wrong one. Okay. Either way, we can see that that low now has increased by a lot. It was at 22. It increased 22%. That high didn't very much get messed with at all, right? It's still 67. It was 77. So with that being said, we know that that opening price, right, getting below it, right, means that the probabilities, some of it come off of the high and go to the low, right? Looking at this right now, as it said, since we haven't touched that high, we know that the higher probability is take out previous day high. But now we have to ask ourselves, from a data approach, how high? We just click on this little number right here, and let me turn some stuff off, and so I can explain it. So we know off of the previous day high that 30% of the data, so the 30th percentile is this blue line. That means 30% of the data, which is like 400 data sets right now, right, have made it at least 0.11 above previous day high. Oh no, 0.34% above previous day high. And if we scroll up a little bit higher, we can see that 50% of the data at least made it to 0.59% off of the previous day high. We scroll, and we know now the next one up is the 70th percentile. We know that our mode and our median sits between the 30 and the 70th. So we know 70% of the data have made it above, have made it to the 0.96, and then the 90th percentile, meaning that 10%, only 10% of the data has made it above 1.68. So this is a better way to look at it, because I know a lot of people don't understand percentile. All the 100% of the data sample, right? We know that above the 90 is only 10% of the data. Above the 70th is only 30% of the time we made it above here. We know above the median, 50%, and above the 30, 70% was above here, right? So now if we put this back on, right, we can start seeing the spread of that data sample. And as we thought, majority of the mode is gonna fall, which I don't have the mode on here, but you can just look at it and see the most occurrence is between 70 and 30, and 50% is right here. So we can use that median price and say, hey, like that's probably a good target because it's near the mode, is at the 50 percentile. And we know that there's a lot of reversals that happen here. These are outliers, which are news-driven outliers, right? Now, we don't really have any news. I don't think tariff talks and high headline risk was that impactful over the weekend. We know that NFP Friday CPI is not out, so we're not going to target these higher percentile moves, right? So we're going to say 0.59, right? So now we know that this high has a 79% probability, and then a good target for it to go up from a data approach is 0.59 off a previous day high. So now we have some realistic expectations to our trade, right? All right, so with that being said, we're going to move on. Now we know the higher probability movement for the daily candle and what to expect. Now we're going to move on to the daily profile based off of what the Tokyo markets did, based off of what the Frankfurt markets did, right? Now we can put probabilities on what realistic expectations they have for New York 1, meaning from 8:30 to 11:30. What can we actually expect, right? Where is the line in the sand going to be? They say don't expect a higher probability move, and what are we going to expect the high probability move is going to be? So right now we have a high day at 8:30 and a low of the day at 5:30. As you will see, there's not too much other than one scenario will support this low of the day, but neither scenario, and one scenario will support this 8:30, right? So let's go into the data and start looking at that. So we can see Tokyo was none unbroken, which is very, very rare, but fun, right? And then we can see that London is long false broken, right? So we lost two of our probabilities. We usually target Asia and London, but they've both been hit already. So we're not going to worry about them. We know that we broke out of the 7:30 to 8:30 range to the upside first and foremost. So we're going to expect long, right? We're going to select long here, and we know The older boot camp members know what that is, but I'm not going to teach that because it leads to too much confusion. But we're going to collect long, and we can see that there's a 67% probability of it going false, meaning that we're going to breach this low right here. And that there is a 32% probability of us not being able to breach that, right? So now what targets do we have below us that we can use, right? To see if we're going to net, right? We have P12 low that hasn't been hit. We've got P12 mid and Globex midnight, and then we have settlement below us. So now I want to see, because Asia OU has already been hit, London OU has already been hit. It doesn't mean the market won't find responsiveness off of it. It just means that, you know, my job is to find a higher probability movements, right? So let's go over here. Let's click on false, and let's see what these levels look like from a false approach. We can see Globex open between the time of 8 and 12, right? Has an 84% hit rate. By 9:30, approximately 70% of the time has already hit that 84%. We know that there's a secondary mode to the right of the median, so this is the primary time that we would expect that to hit, 9:30 to 9:45. We can see midnight should be getting hit between 8 and 8:45 majority of the time. If we can't hit it by 9:45 where the secondary mode is, right of the median, then we know not to expect it. So think 30th percentile, 50%, 70th percentile, right? So we know that by 9:45, if we haven't hit that, we gotta let it go, right? Looking at previous day high versus low, we can see just based off of Tokyo and Frankfurt markets that there is no real edge like candle science showed us. But we do see that previous day high, majority of the time out of this 35% of the time, gets hit between 9:30 to 9:45. All right, RTH gap, right? Settlement, right? Just by itself, we know that it happens 75% of the time, and let's filter it by Monday. 25% of the gap fill, meaning at 9:30, based off of 9:30 and CME settlement price, if we put a fib between those two, this would be 25, 50, 75, and 100% levels, right? We can see that 100% gap fill is 80%. That's down here, right? So now we need the if-then statement for those probabilities to turn on for this low to get taken out, right? So we can capture that. Right, so let's go back to high of day and define what the high of the day looks like under this scenario, and what kind of market structure we can expect. We can see right here. We can see right here that the high of the day can happen at 8:30, but it's only happened 4% of the time. We get majority of the high of the day between 9:30 and 10:15. We can even put 10:30 in there before we start dropping off. So 3%. 3%, 6, 11, 11, 19% of the time you put that high of the day between 9:30 and 10:30 in, right? Or you're going to put it in between 15 to 16. So let's look at that. 15, 2%, 4%, 5%, so 7, 7, 4, 11, 11, 3, 14, sorry. 14 plus 7 is 21. So 21% of the high of the day lands in the day high of day, and then like whatever I said here. So we know 18% is here, 21% is at the end of the day. So now this is where the live price portion comes into play, right? If we see us put a high of the day and then we move extremely away, we know that it's either going to put the high of the day in and then the low of the day towards the end of the day, or it's going to put a low of the day in and start putting the high of the day towards the end of the day, all right? All right. So with that being said, from a price standpoint, we can see that low of the day under this scenario usually goes from 0.5 to 0.7 off of Globex open, right? So meaning the highest probable place is below settlement. Well, that sinks in with the previous day. I mean, the settlement fill, right? So that looks more like 0.5 to 0.7, sinks in with settlement fill, right? 0.3 to 0.6 for the high of the day. We know that this can be a possible high of the day, but looking at the markets over time, right? We know that New York 1 from 7:30 to 8:30 correction, 1130, love like puts majority of his high right here that sinks in with that high of the day probability, right? So this is the 30th percentile of the high off of this breakout. This is the 50, and this is the 70th percentile of the data, right? So we know that that's still in play, right? So what I'm going to do, right? And then the last thing I'll talk about is the highest possible structure. This is structure with probabilities, right? Is that we can expect a downward drift between 9:30 and 11:30, and then we'll use the afternoon range to lead our trades then. Right, so if we start seeing a high get put in, or if we just start selling off and 15-minute lows, keep making new 15-minute lows and can't make a new 15-minute high, we will just continue to trade sell the rip kind of days, and we'll expect to either get a high low of the day in this period, or the high of the day is playing it, right? So the game plan here, right? This is the 9 o'clock candle, right? This is 9:30 price on the 1 minute high to low. And what I'm going to do, because we know that I'm expecting the false, and I'm expecting, if I get the false, I'm expecting 12 low, I'm expecting settlement to get hit, right? More than not, right? So if we get below, if 9:30 breaks up and starts going towards this area right here, right? I'll take longs for a cash flow target, meaning 10 basis points, right? But I will be looking for the 4-step reversal, meaning get below 9 o'clock's 50, get below 9:30's low, 10 o'clock takes out 9 o'clock's low and puts the Q1 high in. If I see those steps, any shorts that I took in this area, I'll hang on to for extended targets, right? Targeting settlement and pre-settlement and P12 low, all right? If I don't see that, if I see us not be able to get below 9 o'clock's 50, not be able to get above 9:30 low, 10 o'clock takes out 9 o'clock's high, right? Remember, we're still expecting 0.56 from candle science. This is the median price, right? If I start seeing price not being willingness to go lower, then I'll keep taking 05 breakouts to the upside. And then based off, I'll be expecting a long true scenario, then a long false, and then I'll lock this in as the low of the day. My job will only be to buy dips very strategically as we expand higher. Now, one thing we have noticed in the distros, right? And this is how we tell if volatility is still expanding, meaning the ranges are still getting bigger and bigger and bigger, or staying at a big range state, or they're contracting back to normal, is that we look at, did Asia overspend its quarterly targets? And we see Asia has overspent, but not as much as all last week. So we're starting to see signs of a possible tightening of volatility, or tightening of that range, smaller ranges. London overspent, but not nearly as much. And New York 1, which over the last 16 Mondays, right, typically moves 0.59. So we expect it to overspend, but like how much does it want to overspend, and what targets can actually be achieved based off of this overspend? So if we started coming to settlement right now, right, we would have to put a 1% move in. Now that, in a market like last week where volatility is expanding, that's reasonable, right? Like the local market in volatility state is saying, yeah, we can definitely do that, dude. But when we start seeing volatility contract, this has to come off the table, because it's not realistic, and it's not, you have to be in an abnormal market to make those kind of movements. So our current state right now is 0.59. And on the market open, I'll be paying attention to see, can we actually start overspending, or does it keep sucking back into the range and making out with 9:30? So trade plan right now, below 9:30, sell, try to extend target, use increased position size. Above 9:30, take the 9:30 cash flow trade with regular risk per trade. And then based off of, if I get a directional day, right, try to take cash flow and targets longs only, right? So shorts, I'll be inclined to turn on longs back on in the afternoon. If I get a long false, I will definitely take shorts only for the morning session, other than the 9:30 trade. If I get a long true, I'll turn shorts off completely and just go pure longs only strategies. Ah, damn it. Okay, I gotta go on mute real quick. Thanks.
You good, man? Hey, while we're
Forgot
sitting
to
here,
cover the
What's
damn
up?
queen. I forgot to set my limit order to cover the queen, and like now I'm just like still in full position. So let me cover that real quick. And it moved really far away. Ah, stupid limit order. All right, now I'm good.
Okay.
All right, give me a second. I'm gonna mute real quick.
Good, man. Take your time. Hey, while we're waiting there for Mickey, we got A2 people in here. All right, we got the QR code on the top left. Here, I'll put it on the main front too so you guys can see. You want to scan that? Want to join the boot camp? The next boot camp to understand what we do, what we're talking about, all the statistics. We hold your hand from A to Z to show you not how to be profitable. Okay, it's at the end of the day, it's still up to you on do you want to stick to your process? Do you want to stick to your rules? What type of trader are you? All that stuff. But we will show you the tools that we use, how we keep the same processes the same way every single day, the statistics we use. If you want to learn all that, right? If any part of this interests you and you're an analytical type of person like we are, you can scan that QR code. It's $100 for 3 months. And then if you want to then maintain access to using the tools and then watch us trade it live Monday through Friday, we do it for free here on YouTube. Tuesday through Friday, we do it in the Pack Discord, Pack Trade Group Discord. Link is in the description below as well. And yeah, that's what we do. Just give you all an update. We're still sitting here long for New York 1. I was starting to sit here and think that we were going to do a little bit of mean reversion in the pre-market, because sometimes we do. Sometimes we love to hit this pre-market mean reversion and then open up near the P12 mid. But if we still continue to push to the upside into this footprint and we open up the market, one thing I want to put on your all's radars now that I have the high day, low day projections on, and this is that directional move like I was telling you guys. So in addition to just being able to see that we do have an in statistic low of day, not for the generic times, but for the variables that we've done for Asia and London. Interestingly enough, you can take a look if I zoom in right here. We've made a low of day at 535, and look at what the daily profiler is telling us. For a long true, that's what this L/T stands for. We've met both distribution, which is just distance away, like using the y-axis, and then the x-axis is time, and we've also met the time. So this is another little breadcrumb for those of you that are in the pack and that are currently going through the boot camp. This is another little breadcrumb that if we stay above New York 1 staying long, and then if we break through the long false distribution, especially by 9:45 to 10, then I'm accounting even more that this can be the low of day, discounting the statistics below, and keeping my sights for scaling out of an extended cash flow long.
And another cool stat to support that, which we were talking about before the market opened, is we know over the last 252 days, the last year's worth of trading, right? The streak of a false has been 8, meaning we've gone 8 days. The max streak that we've gone false in a row was 8 days. We're currently on day 7 of going false. So we've gone false 6 days in a row. So now when we think about the probability 63 versus 32, whatever the long true false is, we get to increase the true day probability because we know we're at the almost max streak of the variance of false days in a row versus true days. So if you flip the coin, right, heads or tails, we know that it's a 50-50 probability. But if you collect the sequence of how many heads streaks landed versus tail streaks landed, you get a variance. And now you can start measuring, adding to that 50-50 probability based off of how many heads that got hit in a row versus how many tails got hit in a row. So there are more probabilities for increased probabilities for a true today. I probably just lost everybody. I don't know why, but like I don't know how to explain that simple to people. I've tried everything. Austin, are you there?
Yeah, sorry, I was telling Alyssa bye.
Oh, yeah. Oh, I was just explaining how like the variance of true versus false, like it's adding probabilities because well, out of the last year, we've had 8 days in a row max to go false, and we're on day 7. Uh-oh. Looks like margin call is calling. Okay, I got to learn how to turn this off so it's not interrupting the stream.
You can temporarily pause alerts.
How do you do that?
Click the little time clock thing on the right. No, the main right.
Right here?
Then and then just go to the settings. You can just click the pause button.
RTY and Q, not any on YM. Why is there not one on YM? Okay, cool. Go to the settings.
No, that's it. You did it right there. All the pause buttons.
Okay, cool. Hell yeah. That is super simple.
All right, we're taking New York 1 high again, still in this footprint.
Uh-huh. It's another thing. Out of the last 50 Mondays, 8 of the Mondays put the low of the 12-hour cycle from 06 to 1600 or 17, 1800, whatever you want to go with, right? You have a mode right here to the left of the median. So like you can see clear as day, like this supports a low right here and then a continuation up to the distribution in the day. So I'm paying attention to that as well. That's interesting.
All right. I'm glad to see that we're actually getting outside that high because that the only thing in the back of my mind was if we were going to one tick wonder the high.
Yeah, I was like, oh God, come on.
Then also from a time aspect too, we have if this low a day's respected right here, and then we break above 930, we have not only would we be disrespecting the long false distribution, but we also have a time. So if we take 930 as a new high of day, like right now we're actively making a good in statistic high of day generically, but if we move past that 945 to 10, right, we're now exchanging an in-stat high for an out-of-stat high. And the next time to make a new wick to the daily candles to the upside would be 1245 to 30. Uh-oh.
So I think now's a good time. Now's a good time. No, you're good. Now's a good time to talk about selling 15 minis. I'm just kidding. Now's a good time to talk about the ICT thing. So a little bit about me, right? Like, so I did sit on an institutional margin and collateral desk. And like, I did study ICT, I've studied DR, I've studied auction theory, I've studied not so much supporting resistance or supply and demand, right? I definitely understand the DOM from a next level approach. And the thing that I learned a long time ago is that like, you need to make the most linear yes or no, are you right or wrong, yes or no process that you can do. But it has to be dynamic with a market that's always changing. When we ran the numbers, there's 25,000 possible wiggles that the 5-minute chart can do from 9:30 to 16:15. Right? The human brain cannot memorize all those wiggles. And then when we raw dog backtest strategies from anywhere from ICT to anything out there, just in its own state with nothing to turn it on or off or if-then condition, just in the basic states of its being, right? We saw that intraday strategies have anywhere between a 15% win rate to 60. Not many, actually there was like 1 or 2, but they're too complex to talk about, have above 60 in in their state, meaning I'm going to take this trade strategy every single time, regardless of what the market environment is, what volatility conditions are. So now, right, like ICT was one of the dudes that I studied that, like this guy puts together a good if-then statement to define the daily candle. He uses Asia, he uses London, he uses New York AM, New York PM. He does checkpoints. And if you know anything about statistics, forecasting, or anything like that, right, you know that the longer between checkpoints you have, the more natural drift that system will have, meaning the less accuracy you have, right? So it's all about the if-then statement that you can identify that helps you clear, hey, this high of the day means if I get a 9:30 to 10:30 high of the day, that means more than likely we're going to have a red daily candle, right? So I should be a seller only. If this low of the day at 5:15 in the morning holds, then I'm going to have a green daily candle. Which one has the more probabilities? Well, that low probably has the more higher probabilities, right? So should I be a buyer or a seller? Everybody who was anybody besides the influence, and I don't think Mike was an influencer. I think he's a really great trader. He's built a system that he can trade around. But influencers, right? Influencers hate statistics. You know why? It calls out their bullshit, right? Remember, they're trying to push affiliates. They're trying to push whatever, right? So they really will be the biggest, loudest people that say stats are stupid or anti-stats or whatever. People like Michael, who are like, I believe is a trader, and people who are actual traders, like they've all been through the bare knuckle fist fighting markets, and then they realize, oh, I need if-then statements to turn systems on and turn systems off. And the only way I do that is to collect data on what I'm looking for. So I love the way that he respected the data and understood like why we collect data and how we collect data. What was your thought process behind the whole conversation? You did a great job articulating what we do, by the way.
Thanks, man. Yeah, it was fun. I'd say I remember, I don't know if Dom's in here. Dom asked him, I was just sitting there listening, hanging out. And Dom was like, what's your thoughts on stats? What's your view on stats? And yeah, like even what Mickey was saying, I've never understood the division or the hate or the shade or whatever the heck you want to call it. Like I've never understood the negative energy against applying numbers to the chart, because we're literally looking at an X and Y axis with numbers. We are making decisions that are backed by monetary gain or loss. And like I said, that's no matter where you go, it's you do that. It is a staple in any other industry that you have to know your numbers, but in trading it is looked at as if it is this crazy off the wall concept. And I don't know, it just makes me go crazy.
I wouldn't say trading, I would say Twitter and Dreamer. Not even so Twitter, because there's plenty of professionals on Twitter that support statistics. Like they wouldn't make a decision without some kind of probability. But like the dreamers on Twitter, the people who are gambling in the markets.
But Dom asked him, he was like, what's your thoughts and all that. And I think it was funny because I don't even know if like Michael seen he did it. He inadvertently answered his own question because he was like, well, I did that back in my day. But then he was talking about how like, he was like, for example, I would run, how many times when we take the first 30-minute initial balance, how many times do we just stay above the high or stay above the, and I was like, yeah, statistics. And that in right there is exactly what we do, is we say, how often does when price does this repeatable movement, whether it's a break above or below a range, whether it's a break above or below an opening price, whether it's a close above or below an opening price, whether it's some objective move, something that when price wicks this high, wicks this low, moves this much, whatever move you want to do. And that's the cool thing about what we do. You can, as long as it's objective, you can measure it beyond your wildest dreams and go crazy with it.
And the cool thing is like, and this is a big misunderstanding, like you don't need 20 years worth of data. You just need to see the edge. Is there a positive expected value? And then you need to find a way to align that statistic with the live market. When do I turn this on? When do I turn it off? AKA entry drills or whatever.
Like, don't get it twisted. If here, let me share my screen. This right here, like when I tell you guys about midnight open, and I'm like, yeah, midnight open. If I go to the daily profiler levels here, you can see nothing. Okay, there we go. You can see that midnight open had a pretty decent statistic, no matter what we look at, and that's out of 4,000 some days. If I reset this to the variables around 4,000 days, 68%. But we use these 5-year, 10-year, 20-year lookbacks, I call it. We use that just to tell us there is historical relevance, right? Like, it's not as if I'm basing my decision today on what happened 20 years ago. It's that if I want to use midnight open as my direction of some kind, that we were going to at some point visit this area today, is this historically accurate, or is this just a phenomenon that may be just happening when Trump is in office because we're doing XYZ, or when news is doing this, or blah, 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 blah? Like, is this making me actually have evidence that outside of the market we're in, is it relevant? And if it is, boom, now I want to take it one step deeper and go into the current markets. I want to see what is the current live price doing. And then when it relates to the same direction as the historical evidence, aka midnight open, I'm going to freaking hit it. And that's it. That's what we do. We use numbers. And that's what I was telling Michael. That's what I was telling Pax, because even Pax was like, you're making my head hurt with it. And I was like, in the very simple terms, if I could explain to anybody what we do with statistics, we give objective checkpoints in price. When live price is agreeing, we give realistic expectations of where price can checkpoint. If we're bearish, if no matter if you're an ICT trader and this box is a fair value gap to you, whether you're like me and this is a footprint, whether you're a support and resistance trader and this is a resistance, whether you're a harmonics trader and this is a bat pattern, whether no matter what gives you objective bullish and bearish intent, when that bearish, what you could be a pattern trader. You could say when this candle pattern, makes a volume imbalance, or when there's a flip, or when there's a 1, 2, 3, 4, sequence that gives you a bearish sequence. What the heck ever that clicks to your brain that says this is bearish. Now, all statistics are doing is it's taking it one step further. Instead of it just telling you bearish, we're showing you where are you bearish to. If we're going to mean revert, if we're going to take this down move, where are you bearish to?
Yeah, and I think that's the difference between people who are here to make money and people who are here to feed their ego that they need to be able to predict the markets. There's a difference between trading off of probabilities and taking the highest probable move, and people who get their rocks off because they think they can predict the markets. And the reason why this is important, and I'll do the bottom line up front for this, it all leads back to, can you consecutively and consistently actually use the same proper position size and take the same trade over a course of series, over the next 100 trades, over the next 1,000 trades? Can you exploit that edge in a manner where you can get a monetary benefit from it, right? So, like, our job isn't here to be, I call it to the tick level kind of traders. We're like, I'd rather be the, hey, I made $30 a day over the last 6 months. Because my job here is not to, if I was the dude that was pulling the levers of price, then I would have to know how to move price to here, to there, to everywhere. But that's not my job. My job is to be a disciplined trader who position size correctly and takes the trade so quarter over quarter I can survive. And so systems should be built around that concept, not about how great we are at predicting and but how great you are at following your damn business plan and your trades.
That's it, bro. We got some cool people in the chat here. We got Yvonne. What up, Yvonne? We got NQ Stats. Chris. What up, what up? We got the Rip. What up, Rip? I know I see you said you watched the You watch the streams and stuff every now and then, but it's good seeing the chat. Good to see you guys. GMT, good morning, good morning. Trades Don't Lie says trusting any chart pattern means you already trust. Exactly. Exactly, because what's chart patterns? They're off your OHLC data points. And now all we're asking you to do is say, hey, off these OHLC data points that you swear up and down you don't use statistics for, how often is that OHLC data point giving you that hit or that move or that strike rate of a movement or that level that's going to get hit now because of your OHLC data point telling you that's bearish or bullish? Absolutely. Absolutely. That's funny you say that. This is freaking cool. How do we join the pack? Need some. Well, first and foremost, none of what we do is secret. Okay. But scan the QR code on the top left. January. That's when we start.
And the biggest thing you've got to ask yourself, is are you willing to put the work in for your business plan? I don't care if you make money. I don't care if you lead to long-term success. But what will happen is phase 1, we will teach you how to read a live market. Phase 2, that's the first thing we do, right? This is the 4 possible things that the NASDAQ can do between 930 to 1600. This is the difference between fixed position size and risk position sizing. Here's how we read a live market, right? Then we teach you, hey, this is historical data, right? This is how you align the historical data. Here's a repeatable workflow to be able to anchor that historical data and know when the live price is saying, hey, we should be going here versus here, right? There's days that the market likes the 20% probability over the 70% probability, right? These things happen, right? And then phase 2, we teach you how to measure trade models. Or do they have an expected value, a positive one? What's the profit factor? Is there edge, and is that edge sustainable, right? Is it easy? Is it something realistic that a typical retail trader can trade? Yes, it makes money, but can that retail trader survive the win-loss?
Bell button. Sorry, Mickey, just saying one.
Oh, cool. And then we teach you how to measure systems and turn them on and off, and when to extend TPs based off the probabilities in the live price. And then phase 3 is you build your business plan. All right, market's opening. So it's 3 months of you focusing on you and nothing else and building your stuff, but with the right tools and the right formulas and the right understanding of how to actually build a system from a quantitative edge.
Okay, so going into market open here, we got 20 seconds left. If market open sells, okay, if market open sells, if we get a market open range, looking something like this, whatever, we don't know obviously how big the range is going to be. However big the range is going to be, if we break to the downside right away, this is going to be my first signal of an extended cash flow short for the false and the mean reversion of these statistics. If we break to the upside, I will only be looking for a cash flow trade for a continuation until 945.10. If my 945 to 10 we're still above 930, and let's say if I get chopped up, whatever the case may be, and I get another position for a long, I'll then be looking for the extended move for the true. But for right now, if we get a close below market open, I'll be looking for this short for an extended target for the rest of these statistics here, because now we have a 914 high. And that is for the long false. You can see right here. Now, obviously, it's not the time-wise. Time-wise, we got 945 to 10 for the long false, but we just barely get the distribution.
This is an easy range. It's only 0.15 right now.
Oh, God. Knock on wood. Knock on wood. Chill out. Chill out. Come back down. Come back down, baby. 3, 2.
Go.
Yes.
Good range.
Hey, Wingo actually asks a really good question here while we're waiting for this break. I can answer this in 5 seconds, Wingo. I do it every day already.
Yep.
What you see me do, the only time I reference a spreadsheet or look at a spreadsheet or data is to show you guys what I'm talking about, so I don't sound like an absolute crazy person.
Yeah, like most of our tools that they teach you in the boot camp, like we don't have to sit there and use dashboards and spreadsheets and all that. We do it so that's the importance of a repeatable workflow. Like if you do it enough times, you don't need it. It becomes like just second nature. All right, let's see if we're gonna get that previous day high. I'm already long, by the way. Call me a fraud all you want, but I saw the fact that 9:30 was a green candle. You have a higher probability of making a new higher high. So I take the long off the 75% area as it was forming, and now I'm going to probably cut it, or at least
Yeah,
take
I'm not taking that. No long for me, guys. Can't define my risk. Way too big of a break right here.
So now I'm going to take some of this off. Sell 10. And then now we're entering that area of reversal, right? For the false, right? Remember, we have had more true false days than true days. And so right here, right now is going to tell us, like, is this going to be a day where we actually turn around? Or no, is this a day where we stay true for the rest of the day? Now this break off of market open is a signature of a DWP, right? So we definitely are expecting that.
That's a good, beautiful long, guys, but I couldn't define my risk. I can't take that.
All right, I've got to cut half of the position because we're up in this box, and right. So now we know 50% of the time we turn around right here, right now, right, and that's where we're at. So now I'm going to skim a little bit more off, or take 5. Damn it! All right, either way, position's closed. I hit the wrong fucking button. And so now for me, if we continue to rip, my next trade will be around the 10 o'clock 05 boxes for cash flow to the upside. If we stay this way. Right now, I'm going to pause, set the conditions to see if we're going to revert or we're going to stay long true like we expect.
Yeah, this is looking long true now. We're breaking through the footprint.
Hey, since Chris is in here, you should not rub it in his face, but you should give him the hint of what London did and what you expect it to do.
I blow his DMs up every morning.
Okay. It's such a cool phenomenon.
Yeah. Let's see if we do it today. Cause God, man, that stupid breakout candle. I couldn't put my risk there.
The rips. Where the heck have you been, dude? DM me. Man, the rips is a good dude, man. I know he's at that trading phase where he's just bare knuckle fist fighting and figuring it out for himself, right? Like he's at where everybody wants to be, right? Where he's like, hey, dude, I need to go inward and figure out what I can do. DM me on Discord, dude. He's at that compounding phase of his trading journey, and he's removing all noise from his decision making, and that's a pretty cool spot to be. That's kind of creepy. Thank God you don't live next to him in Q stats. He'd be hovering over you, looking at you while you sleep. All right, so we're breaching. So, all right, so let's look at. We saw that number one, this previous day high had a higher probability than not to get hit over the low, right? That wasn't rocket science. But we also know that 0.56 right there is the 50% extension of it. So we're approaching that right now. So from a candle science approach, right, we knew that we're right here. We're at the median, 0.59, sorry. Right, so now we know that 50% of the reversals came in below us, and now we're heading up to between 0.59 to 0.996. This is where the next like bulk of data for the reversals will kick in, right? Because as we go up, you collect, like, think of hungry hippos, right? You start with 10 balls. Within the first 5 seconds, 2 of the balls get eaten. You know that there's only 8 balls left. The next 5 seconds, 2 more balls. There's only 6. So the percentile of balls being eaten is increasing, and the amount of balls left is decreasing. And I know somebody's going to say something about the balls. So that's a pretty cool stat. So now we're going to see, now we're entering like very, very high probability reversal at this point right here. And we know that 50% of the data reversal has happened at this level. So now we're going to see, do we get it? But based off of this price signature, DWP day, not reversal, like not meaning like just that we put the high in, past previous day high. Because the DWP, what do we do? Type it in the chat if you went to the boot camp. What do we do in the afternoon and the early morning?
God.
Yep, we go into afternoon range. Good trade impact trade group.
Let's go. 102. Hey, drop in the chat if you guys got this cash flow trade. I couldn't freaking take it, man. I wish I was with you all. Flag got it. Nice.
That's right. In the afternoon, late morning, early afternoon, we start the range for the rest of the day. And then we range in this settlement, or we range for the majority of the hours, and then we pop up and make a new end of day high a day. Why did I have to use hungry hippos and balls as an example? Taki, good job. Good job, Andrew. A-star, good job. Oh my goodness. Yes, yes, yes.
Look at all these beautiful people. Heck yeah.
And now, ask yourself, do you need to keep trading? Is the next trade going to have the same amount of edge as this trade? If it does, take the trade. If it doesn't, don't take the trade. You've paid yourself, right? Let the compounding part do the heavy lifting. Don't give these markets back your money. All because you are high off of the dopamine from this trade.
Hey, and then also shout out to the people that didn't take it. It wasn't a part of the plan. Dave said, I stayed out. It's all right. Dusky said there's a lot less talk from Mickey about balls in the boot camp, but there's no talk about balls in the boot camp. Oh, man. Freaking Vlad, 0.28% targets. Nice. Shag 417 locked up. Twisk said, is the Pope religious? Miller got it. SN got it. ER, let's go. Aster.
Let's see if this is that high of the day. My bad.
No, you're good. You're good. Just shouting these people out here. Let's go.
So now we get the luxury to say 9:45 to 10. Are you going to lock this in as a high of the day and cross the head lower and make it a false? Yes, this was extreme. Or are you going to stay up here and make it a DWP? Are you going to take the 45?
Yeah, we're going to see where we're opening it up at. If we really respect this high of day at 9:35, and then we open up the 9:45 like this, then I'll absolutely try at least one chance at this. There's a lot of distance here, you know?
Yeah.
Now, if we come back into market open in the next few minutes and we just suck back in here, I'll just wait for the break.
Mm-hmm. Oh my gosh, that would be amazing.
Yeah, we'll see.
High of the day, plant the high of the day, and go from there.
Dude, if you long the bottom to the top, and then I could short the top to the bottom,
that would be cool. We do that at least once a week. It seems like. Usually, you're the one taking the 9:30. I'm taking the reversal.
Yeah, we're always opposite, dude. We're hedging each other. That's what it is. The Pack Hedge Fund. Oh, my bad, Shag. Here you go. I thought I was sharing. Here you go.
You're not sharing. You're Austin.
Yeah. 945 here. So if this 935 stays the high of day, okay, so if we do lock in this high of day and maybe we broke through a bit of distribution for this long false, because keep in mind, it's still 942. As bullish as this looks, we can come crash down in 5 seconds, but we're going to let live tell us that. Live price component number 3, okay, number 1's P12, number 2 is market open, and number 3 is we can start to use 945 to see, are we staying above 945? If so, we got about a 0.17% average MFE off 945. And then that would just be a, continuation off the move. Or do we get below 945 respecting this 935 high? Now, we're already starting to show signs of potentially taking this 935 high. If we take this 935 high, 945 and so on, then I'm not so much thinking this high of day is in. I'm thinking we're just in the body of the RTH open and also the daily candle open. So, or the daily candle, the body of the daily candle. Second stayed out too. That's all right. Cool. I'm glad to see you guys managing risk. Your own independent traders. Raise the bar, Jay. Done. 10:52 on the day, baby. Let's go. Dell stayed out. Vlad said the deed is done. John got 4 micros at 375. Let's go, guys. Good job.
All right. Goodbye, YM. YM's got a market open break to the downside. Yay.
Let's see. So YM was easy. Look at this. Oh my, kidding me?
I know.
A short on New York 1, failure to go false with all stats below. God, dude. Russell's. Russell's looking all right. ES got a nice break off of market. It looks like a lot of stuff's pulling back to market except MNQ.
Yeah. No, MNQ's
still above.
Oh yeah, but it's starting to pull back right now.
Oh, we're getting bearish distribution. There we go.
I know.
Bitcoin slap shag. MB. Starting to form bearish distribution. You guys see that red wolf? That's what that means. If anybody's new here.
All right, I'm gonna lock this one out.
So this is what I'm looking at with now being at 945 and we're still above market open. So if we get a break above 945, I will try for the continuation. If we break below, I'm really not interested in this short, only because now the distance between 945 and 930 is so small here that I would rather just wait for the confirmation instead of here.
Yeah. So waiting for the 930 low. Yeah, what if the 4-step reversal? That's why we have it. Like 4-step, that's like a major criteria for the 4-step reversal. If you can't get below that market opening, like you're gonna get smoked every time you short the markets.
What's like, you remember that 945 short we took? I think it was 2 weeks ago,
Yeah.
2 Mondays ago, 3 Mondays ago.
Oh yeah, on Old Boys podcast thing.
Those are the shorts that, like, if we're gonna do that, it's like that's the high of day, you know. So like it
better be aggressive, right? Like you gotta have aggressiveness. Like that's such an easy filter to your trade direction. Like if you're above 930, only look for longs. Doesn't mean you have to long every dip. You should have systems telling you when to go long. If you're below it, look for shorts. People just did that one step, they'd find like a lot more confidence in their trading.
Yep.
Because it's such a fallacy what you see. You think you're supposed to be buying and selling and selling and buying and buying and selling and hedging with this and blah, blah, blah. But it doesn't have to be that fucking complex, right? When you see the condition that right now, the low of the day is in, my job is not to ever look for sells. Only look for buys, but I have to be strategic with it. And it better be freaking golden for me now because I've already made profit for the day for me to take those buys.
If we break above here, I'll join this long.
We're above 945, right?
All right. Yep. I just went long.
Got it. Good.
Sell stop will be below 945. I'll scale out the cash flow portion of this move here at 0.15 for a new high.
All right, let me turn my sim account on. Let me get this going. That way we can get you to TP. Or at least cash flow. Best I can do is cash flow.
Best I can do is 37 points.
DB Tech, yes, he loves automation.
All right, and then the statistics, just that way you guys want to understand the trade here. So the statistics I'm trying to capture with live price is accepting above 930. Live price is now accepting above 945. Live price has broken through P12 high, which is the first half of the daily candle. And so now I'm trying to take advantage of, if 3 for 3 is telling us bullish, can we get at a minimum 0.15, which the average is 0.17? If I get stopped out, cool. This is a very easy business expense. And then I'll wait for the confirmation if this is the high of day for a shorts below for this mean reversion to the downside. If I can't even get 0.15% off this, then I'll just hold steady, wait for 10 o'clock. But it looks like I could be getting stopped out here for this bearish distribution. Let's see. There we go, stopped out. So now I'm just going to wait for the confirmation below 930. If we reject off here, we fail to go lower, close back again, I'll try again. So it's either short below 930, long above 945.
Definitely like it. That's such a cool feature to see, you know, like how far above the daily open that you can expect, like where the median of that is. I don't know. Take guessing out of the game.
When you said above 945, you mean the close of 945? Because we did not see price above 9. Yes, close above 945. You see the high and the low here, this range, 945. So this is a common time that we just typically either reverse or continue. Okay. So we found footing above this 0.1%. If we get another close above here, I'll take this long again, and I'll try for another long for the continuation. We got 8 seconds left. Let's see if we get this close. Thirty seconds left. Interestingly enough, we failed to do 0.17 off both of these breaks.
Mm-hmm.
All right, I'm long again. I'm going to take my, put my stop here. My sell stop, I mean. I'm going to take 4 off at 0.16. I'm gonna keep it real. Stats of share. I'm glad you think that, Vlad. Yeah, you've been having some really good success, dude.
Sticking to your trade plan and your business plan, just doing the same thing. Make it boring now.
Yeah, the latency thing is pure YouTube, guys. There's nothing we can do about it. That's why we like trading in Discord, because it's instant. If I do get stopped out of this, I'll give myself one more chance. I just don't have enough budget to keep trying to sit here and long this thing if we can't make a decisive move.
And this is the mind fuck of trading too, right? The trade that I couldn't define my risk on, easiest trade in the world. And the trade that I can define my risk on, 0 for 1. And then we'll see about this one. But like, this is where you just gotta stay true to the system that you create, the system that makes sense to you. Sometimes you're gonna have days like this. Can't get out of it.
Another thing is like not changing the decision as you're sitting in the trade. Like Austin does a great job of that because like you get so comfortable back testing and be able to click next. You're going through a whole day's worth of data in 3 minutes. This is the actual part that screws up people who just back test. Like, and you have to get your discipline around, hey, like, has the if thing condition changed? If it hasn't, don't touch a damn thing, right? And let it play out, right?
Yeah, and Dusky, absolutely. That's what I mean. So if you look at 930, well, we broke out here. We had a small market open range, and that's what we were excited about. That's why you heard Mickey and I getting pretty excited because I can define my risk really well with a 1.7. But then we have this crazy breakout candle, and anything outside of max of a 0.3%, it's a very hard stop rule for me. If I can't define my risk within this 0.3% threshold, it's just no trade. It's non-negotiable. And if you look at every trade as, well, what if it's just this one time because I could win this single? Nope. Doesn't matter. It's how you treat 100 trades, not a single trade, just to win it. And you will never see me, Mickey, or anybody on stage here when we stream compromise that just because we're streaming. That's a new thing, Austin using stuff. Oh, shoot. All right.
Oh, nice.
Well,
nice. Did you cover your queen?
Yeah, that was the cash flow.
Okay.
So now I got 2.
I was looking away, and then I felt my buzz and your noise, and I was like, oh, cool.
Daggone it. I don't have the updated code on here.
What do you need?
The daily levels. Here we go. Shout out to Andrew. Trades don't lie. He's about to see me use his tool. Even though we got some bugs to work out, it's still pretty decent. We gotta work out some of these little buggy bugs, and then we'll push it out to the group. But it's doing good. Right? It's doing good so far, especially just mapping out these levels. So I'm gonna sell one more. I'm going to sell one more here at 744.75, which is this 0.1% projection off 945 high and the 10 o'clock high, which has a 93.75% in the past 16 days. If you guys want to see a little bit of a larger sample size, in the past 76 days, this has hit 86.84% of the time. And then 0.1% off 945 has been hit 93. And so now my goal is to try to use these high strike rate areas not to get into a trade, but to scale out of a trade.
And we got the gunship here. We're going to push this up. We got the gunship. We got these levels. We have the gunship average and median MFE right here on a potential true day. I'll move this up to in the middle here. Here's the high strike rate move to the gunship move right here. So we'll put that right smack dab in the middle. $10 taking $9 high for the potential 3-hour line.
Yep. All right. What a amazing, dude. Amazing. I love watching, like, and it's something that's so underrated in this space is like watching a trader just display discipline, right? And you did a great job doing that this morning, right? Saying, hey, I can't take this trade because of that, but like this is the next checkpoint in price that I am going to expose risk to. And now look at you, right? Like you're going to be just fine today. You've hit your second cash flow, right?
I'm about to. I put it here, but because we're showing this I would rather at this point, I know this sounds crazy, I'd rather just miss out on getting even more of this move and just watch this come and take my 2 micro stop out now versus from this high strike rate area to here. That's just another 12 points. So I'm just I only got 2 micros left, and I want my final micro to potentially get this. If we get this 3-hour line, I want to get a part of this 10-hour hourly candle. So I'm going to let this 1 micro, it was at 788 or 748 or whatever. I'm going to actually keep it here at 761 because we have a median. That's what this green line here is. And then this dotted line's the average from the gunship. And then if I go to the 5-minute, we're actually getting a 5-minute gunship setting up actively. So if the gunship on the 5-minute closes in 12 seconds, if I wanted to, I could push this up more. I probably won't. And then I'll just let the final one see if we do get this follow through on the 10 o'clock hourly candle.
So we're officially all that open, high, low, close data. We are above. We're entering the 60th percentile of reversals off of that previous day high. So like you still got plenty of data to capture that move. Plenty.
The rip, dude. You've been gone for a minute. Yeah. So this is a way. This is what I've been pretty open about this the past few weeks. For the longest time, I've struggled to find a way for me to systematically through numbers scale out of trades. And now there we go, second target hit. So now I'm leaving the final one here, and I can actually go over this too. I'll show you guys the stats. Anything you guys like, that's the whole point. These Monday streams and what Mick and I do, this isn't secret. Okay, we're not saying buy our course or join the pack because we hold secrets. We say go through the boot camp so you understand what we do for $100 freaking dollars, and then you join the pack trade group for $60 to just see us now that you've been taught it. The people that did teach it, watch it and trade it live. So the reason we do this and do these on Mondays is if you guys have any questions, dude, ask me. So when it comes to me trailing out, and I want to give you all context while we're sitting here now, because there isn't really anything left I need to do. Either the market's going to turn back around, pull back to market open, give us that apex, and I don't need to be in the trade anyways. And now I've protected my queen. I've cash flowed out of the trade. I've paid back the expense I've made here. This is a pretty cool day that we get to see this on stream. But in addition to that, I want you guys to understand this came through years of looking at the market the same way. Okay, I talked to I had a very fun conversation over the weekend with somebody that was we won't get into that. And they said,
they gave me this pushback, and I wanted to talk about it with you guys. So a lot of people knew me from Twitter because I came out with the midnight snap. I came out with a retracement to midnight open. That is not what I've done my entire trading career. My entire perspective on price, my entire mission was to literally objectify my trading the best way I can. Keyword, best way I can. I have learned so much over the years of simply looking and trying to capture the same thing, which is statistical based price movements. I started out with pivot breaks, statistical price movements, the only way that I knew at the time to get statistics. Then that transformed into, we're breaking above or below these pivots, but we're retracing to a common area during New York, which was midnight open. Then that led me down the rabbit hole of trading with midnight open. But then I was like, the major weakness here is even though we have a good retracement to midnight open, sometimes we just make a move to midnight open, but then fail to retrace it. That's what led me to getting the cash flow move, the lion's share positive price movement towards midnight, which led me down to getting that 0.12%. Then I was like, the weakness of midnight open is when we just directionally move. Look, today was actually a day of that. Today is a weakness. You guys are seeing this live. We have not hit midnight open. And look at what we've done. We've drifted to the upside. This right here is the weakness. And guess what I found? I met this freaking dope dude called Matt Mickey that said, hey man, I use this little funny looking box. It's called 930. Have you take a look at it? And 930, sure enough, was if I'm shorting towards midnight open, but we close above market open, guess what, bud? Cool spreadsheet. Live prices accepting against you. And so now I was like, okay, well, I can not only define my risk by closing out my midnight open trade if we're just accepting above, but now there's also a powerful move off market open, which is 0.1 to 0.3%. And then as I went down the rabbit hole of managing risk with midnight open, guess what I figured out? I can now manage my risk with midnight open, take my midnight open trade, take my market open trade. And then the biggest weakness was, okay, we're making these cash flow moves off market open easy. But dude, there's days where we rip off market open and we don't look back. So how can I maximize my winners while minimizing my losers? Isn't that the name of the game anyways? And so now I was like, okay, well, and you're seeing that is if I know that I'm an objective analytical person, I can't trail like a typical person. I can't trail using structure or, using a high, or I have to have a number to my action. And so this is what led me down the rabbit hole of, okay, I can cash flow. I can give myself permission to take these cash flow moves either off market open or what you guys seen here off 945. It's genuinely just whatever live price component wants to agree or disagree with my statistic. And so in this case here, 945 was the live price component because I couldn't define my risk off 930. And so in this example, I can say, okay, I can take this high occurring move. I know that the average MFE off 945 is 0.17. Well, did we do that? Yes, sir, we did. And so I can cash flow this move off of the common price movement. And now I can use high strike rate moves to not take the trade at that area, but I can use it to scale out. If I know that this projection right here, you can see this 0.1% 945, which is this 0.1, this has been hit in the past 16 days, 100% of the time. And then again, like I showed you guys, if I go to the 5 minute to get a little bit more sample, we can see that level has been hit 94% of the time, 88% of the time for the 9 to 10 high. So I can take these levels and trail them and scale out. They're inherently high strike rates, but I'm not taking the trade with this giant stop and then a 2-point TP. I'm taking it all the way either at 930 or 945, and then I'm letting this tell me objectively where I can place my scale outs. And now I have a system that has even higher, accuracy baked into it. I just have to let the risk management be the risk management. And so all that to be said, it's just an evolution of risk. And every single one of you on here listening, LOL. Yeah. Well, okay. See, some of you guys in the chat already know. Some of you guys listening, if anybody ever demonizes you for change and evolution, they're fucking retarded. And they're probably just butthurt little pussy ass bitches that just want to talk shit about you. Because at the end of the day, you are a trader, a risk manager. And that comes with understanding as a business every quarter. What does every other business do? They look at their business. They look at their quarterly statements. What can we improve? What can we keep doing right? What can we stop doing? What is bleeding the balance sheet? What is not bleeding the balance sheet? Those are the things that you have to pay attention to as a trader. There is nothing wrong with change. As long as you're not changing your entire strategy, right? It'd be crazy if you guys start seeing me stream on a Monday saying, all right, guys, harmonic pattern up above 930. I'm taking the bullish pull back on the bat wing. Y'all be like, dude, what the heck is going on here? But my goal and my mission has always been the same. How can I trade this daily candle in the most statistical and objective way that I can? But I'll also acknowledge I'm not perfect, and I'll always still have plenty to learn. But I will do it profitably, and I'll do it in front of you guys. Unlike a lot of these garbage people. Wingo, you're making my head hurt. That's it, dude. Language. Sorry, but sometimes, man, sometimes I gotta let it out. All right. Listen, you guys have to understand something too. Let's address this. I will never demonize a way of trading. You guys want to trade ICT? Go trade ICT, and I wish nothing but the best for you. I hope it helps you. You want to trade support and resistance? Go trade support and resistance. You will never hear me call you an idiot, belittle you. Will I make jokes? Dang sure I will. You know why? Because I'm not a fucking pussy. All right? Mickey's not a pussy. I can go and say, hey, Mickey, did you get stopped out today? Huh? Or I don't know. We make jokes all the time. You don't hear Mickey say, ooh, what are you talking crap? What are you talking? No, we just joke because that's what life is. It's not taking it too serious. So you will never, if you ever hear me or Mickey make jokes, we're not talking crap like little high school girls. We're just having fun. We're just having fun, dude. Freaking weenie babies. All right.
Yeah.
I use my cussing allowance for the week. Sorry, Mickey.
Yeah, you're not going to be able to cuss all week now. Hope it was worth it. You're going to wish you had that on losing days.
When I lose this week, man, daggone it, I got to use my darns and my doorknobs.
But anyway, like it all goes back to like, who cares what people think? Like your job is to make money for you, your wife, your ex-wife, and your kids. That's all. That's it. I do want to answer Andrew because he wants to know. He wants me to walk through why I expected the long true. He wasn't in the stream when I did that. So candle science showed us that there's as long as we maintain the previous day open, didn't come down and touch it, there's a 79% probability to just take out previous day high. If you remember when I did my war brief, we were like down in here. And then we saw on candle science, right, based off of that, 0.59 was a good target, right? So that already I had in the back of my mind. And then we look over the last couple, we look at the streaks of true versus false and the extremes of it, right? We know that the max streak of falses has been 7 days in a row. We were on day number 7 right now. So we said, all right, that's a little bit more, maybe, just maybe, right? Like we have more probability to be true than false, even though it's 64% probability of false versus true, which was 36. We can add we can take some of that probability away from false, add it to true, because we know we're on the upper extreme of variance of false days, right? This year, we've only had one time where we went false more than 7 days in a row, and we're on day 7 right now, and this wasn't one of them. So we know that from a variance standpoint, we expect more true than false. Right, from P12 level, right, we can see, right, that we had two possible mode times. But one of those times for the 12-hour cycle, meaning that we would put the low or the high in between 6 and 6:30, right? And then the second one was between 9:30 and 9:45. So it's just a quick if-then statement. What is 9:30 doing, and how does it support these two elements? Well, 9:30 bidded, so it told us more than likely this was the low for the 12-hour, which supports the true versus the false. Can you put my chart back on?
My bad.
You're good. Right? Even in the past 74 days, if we look at it from 255 days, it was like 8. Right? So the max extreme is 8 and 1 day 7. So we know that if price signatures show us like more likely to be a true day by getting above 9:30, then that's all she wrote. So for you guys get to learn my 9:30 strategy next week, and what gives me the direction, right? But bottom line up front, it looks like this. Let me pull it over. It's the same one I've been using for years. Like, right, my job, this is just a breaker and a failure swing. This is bearish, this is bullish. This is bullish failure swing, this is bullish breaker, right? And I'm lining it up with the 3 5-minute candles between 9:30 and 9:45, which equal one 9:30 to 9:45 candle. So essentially the same thing we do from a daily context with the 15-minute, the 3 hours. Where are we within the daily candle? I just do the same one way. So today I'm looking at this as 1 minute structure, right? This is 5-minute structure that equal one 15-minute bar. Where's the 9:30 falling within that? Now, I've been doing this for years, so it's a little bit easier for me to see than most, right? And I've got 3,000 days back tested on this. All right, so if I go here, I'll even show you the data. Right, 9:30, right? 2,677 days manually back tested on that, right? Actually, this is the wrong one. Copy of 9:30. Right, you can see it right here, 2,000 something manual days of this entry and this concept. So when 9:30, right? When it was, oh, this is art in Q. So I was already thinking true and previous day high. And the thing that sucks about backtest mode is it doesn't let you see it. But like I saw the low, the high, the low, and all I needed was a snap, right? A snap. And that happened within the first minute. And so what I did, so right there, it happened. And so I saw that it snapped up, right? So when price was coming back down within that first minute, I said, I can plant some risk below this low and start a position here. And then if it was a sell, I'll just get stopped out and enter short for the fall scenario with a breakout strategy, right? So that's the reason why.
We got a question in the chat by Wingo. He said, is that probability a stationary probability or dynamic, the if we don't come back to hit previous day open?
All right, so what we actually just went through last week, all the students got to see, is it's more dynamic than live, right? So we'll do it from an hour to a 3-hour context, right? So we know, we know that this is the previous 3-hour mid, right? When we open right here, based off of how this 3-hour closed, there's more probability of this high than this low getting taken out. From an hourly perspective, that is in reverse, right? Like, so if we take out previous 8 o'clock, this closed lower. So from hourly, this had the higher probability. 9:30 showed the signature, actually showed the signature shifting right here, taking out this high, and then it resets. So it's dynamic if you understand what the hours are doing in relationship to the 3 hours in relationship to the daily. But for just this view right here, it's just a static view of it, right? And then live price tells you the rest of it. So right now, for me to think we're going to sell, the first step would be, we have which way is this quarter going to go, like this hour going to go? Is this going to be an instant high or is this going to be an instant low for the hour? Well, and it seems extreme, but when it shifts, you're going to be glad that you paid attention to it. But this is the 9 o'clock and the 3-hour open, right? So first step, do we take out this low, making this an hourly instat high? Then we expect Q4 lows. Well, during that drop, how is it going to affect 11 o'clock? Well, if this closes as a red candle and gets below this open, by the time we get to 11, then we know that these will have higher probabilities. But if we continue going up, we know that for this to shift probabilities down, we have to cross this opening price during the 11 o'clock. It's hard to explain it. That's why we do it in 3 months, and we make you actually go through the data and find those aha moments yourself. But yeah, long story short, right? If the hours are showing that they cannot breach probability levels like previous hour 50, previous hour open, then my job is to bid it up, especially when I have a long true scenario that supports this low of the day. And to take these opportunities to buy the dips, then to sell the rips. Now, we also are aware that we are at the extremes, right? So this is a cool concept I'm going to cover, right? So we know that for the breakout of, let me turn this off. Let me turn this on. This is good enough. So we can see, right here, we broke out to the long side. 30% of the time we reverse at this level. 50% we reverse by here. 70% we reverse here. So we know we're in the higher probability area. Right, so now I want to show you what that looks like on a chart, right? Actually looking at this from a data approach. Let me put this on. This is so cool. I love this part. Right, out of the last 231 days, when we broke up or down, just the first breakout out of that 730 to 830 box, we know that 30% of the time, we put the reverse one right here. 50% here, 70 percentiles here, 90 percentiles here. So let's go see what this box is rolling out. 0.12. So 0.12 is around here. And then between 0.25 and 0.50 is the median, right? So that would be up. Right here around the 50%. Let me turn off the MAE real quick so it's not confusing y'all. There we go. So off of this break, we know 0.37, 50 percentile, 50% of the time we've reversed by here. Right here, we can go 0.54. Where does that line up? That puts us at the 70th percentile. So we know everything above, right? There's 30% left that has gone higher than that level, then reversed and hit the MAE, not the reversal MFE, but the reverse, like putting in the high probability MAE pullback. Right, so now let's see how high we went and find out where on the chart we are actually at. Right, we went to 0.86. Where's 0.86 right here? Right here. So we know that above 0.86 has only happened 1, 2, 3, 4, 5, 6 times out of 231. So now we have to think, maybe we can start looking for a reversal here. And not just to like sell the market or put a high of the day in, just by between now and 11:30, we can expect a pullback to high probability levels right here, 30 percentile, 50th, 70th, right? And we can see that usually happens, the mode to median happens at 10:30, which is this red line for the pullback, right? How far do we expect? Well, that's between 30th percentile, which is 0.5% pullback, and 1% is where majority of the data starts at 10:30, which is represented by this red box right here. Pretty cool stuff, huh?
I hope today that data set experiences variance.
I'm telling you, I won't trade without stats. And we know that that is data based off last 231 days.
Did you hear me?
Wait, what?
I said I hope that data experiences variance today. Hello?
Are you there?
Are you messing with me?
Either I'm breaking or you're breaking up. If somebody's breaking up.
Is Mickey messing?
I
I
can't hear
think
you.
Mickey's messing with you. I'm
there?
moving it for you, Mickey. Sorry.
Maybe it's me.
You're both
Oh
fine.
His pocket's breaking up, so it's definitely me.
Oh, okay. So he's not joking. All right. thought he was.
No,
Problem solved.
it's me because I heard Pocket breaking up, and I was like, oh, it's not Austin. It's actually me this time. What were you saying?
Can anybody hear Mickey?
Yeah, we can hear both of you.
Just
Oh god, as if you made me fall for it. Damn it!
I said, what I was saying was, I hope that data set you're saying experiences variance today, so that way my runner doesn't get stopped.
Nice. Yeah. I mean, wait, your runner's at 9:30. Yeah, I'm just saying. No, like we have a DWP action day. You
Well, if we do this 3-hour line, I'm sitting pretty chill with it.
Yeah, man. Because if you let's look at the data.
Wait, hold on. Pocket, we gotta tell the Nightbot to chill, bro.
I just saw that.
He said trades don't lie. What are you on about? Like it wasn't just like stop spamming. What are you on about?
There's some default settings, I guess.
That's funny. Don't join.
So right now, looking at data.
Issues.
Hey, Doge, I
right
at least
now
solve tech issues. Anyways, I'm done.
You're such a good say, aren't you? So right now we can see a high day right now. The highest probable high of the day is at 11:30 to 11:45 based off of the long true. If not, 15 to 1600 with a little bit of data between lunch hour and 1400. So you still have data on your side to get a nice little good push up.
Yeah. Well, that's what, like, if you guys want to see the final exit I have planned for this, I don't know. I hate saying I'm never doing anything, but like, I don't just like leaving a position on just for the sake of it. I still think there's value in still understanding what your final exit is, not just, we'll just go for craziness. And so my expectation here is if we get this 3-hour line that we like to call, where basically 9, 10, and 11, it makes a 3-hour line. What I'm going to be looking for is, these are my if-then statements. So number one, I want to see, do we take Q1 high at the 10 o'clock hour anytime between now till the end of this 10 o'clock hourly candle? So if we take this Q1 high, which is at 769.75, then I'm expecting some sort of bullish hourly candle. And then you just go through the if-then scenarios. If this is a 10 o'clock a.m. bullish hourly candle, then I'm expecting more of that 3-hour line, because then 11 o'clock takes out the 10 o'clock high. And then we make that, higher highs, higher lows price action. Now, if we do that, because that's what I'm structuring this final position to be for, then I'm going to wait for 11 o'clock. And this is my final exit. Whatever the 10 o'clock high is, I'm literally just going to place my TP 0.01% above the 10 a.m. high. So whatever we do, if we take this Q1 high, let's say we make a new high like here, I don't know, I'll then just place my TP to whatever that 0.1, and then that'll be my final exit, because that makes me be profitable being wrong. That's what I like about trading. I like the fact that I can be wrong and still make money. So if we do this 3-hour line and the 11 o'clock takes the 10 o'clock high, but if it does something crazy like selling off, whatever, I just need to be right 0.1% worth. And what is this statistic? What is deriving me of 0.1%? Glad nobody asked. 0.1% is typically the wicks of most of these hourly candles. Now, obviously, plus or minus, if you get into the semantics, yes, some of these hourly candles, if you dive into the data and the statistics, they'll be like 0.7, 0.8, 0.15. But 0.1, generally a good rule of thumb for if we're going to make a wick on an hourly candle. Typically this 0.1 to 0.15 area is a good area to see if that wick is going to be created. And so my idea is, if we make this at 11 o'clock bullish hourly candle or bearish, either way, we got to make a wick of some kind. And so the wick is what is going to be my final exit, or the body. The Rip has a question. Asia was a no confirmation day. You don't see that every day. If you have selected all, is that really okay to take both? Because this means one of the two happened.
No, you shouldn't never select all. No, you should never select all. You should just leave it alone and select broken. So none, none, broken.
Yeah. That's what I did too for today. Trades by Bruno Forte. Do we have classes every week in this boot camp?
We have classes here. I'll even go over the curriculum. But I'm not going to show you guys the cheat sheet for the next one. All right, so let's go over to class. All right, so we start off and we teach you how to read the live price portion. We introduce you to MAE, MFB, 4-step reversals, all the live price components, daily classifications, dump pouch. Then we start teaching you the data part. Then we start teaching you like higher time frame stuff. And then we go into what we're doing now, where we talk about how expected value, profit factor, MAE, MFB, max drawdown, consecutive losses affects everything. How to create a positive R, how to position size around that, how do you do a negative R, how do you do a plus R, what market environment are you in with what system. We do a class every single day, right? And then we do a re-engineering of the price every single day, besides this week, which is Thanksgiving week. So I'm not doing classes. I would go over some stuff, but come Wednesday, I'm Audi 5000. But yeah, like, so this is the only week when I at least doing a class or a war game session in the morning and a re-engineering session in the afternoon. That's because it's a holiday week. Next holiday week I do this on will be Christmas. But we don't count that time against the 3 months neither. So yeah, we do a class every day. Now come phase 3, like that's where we won't do any more classes. We will sit there and help you build your trade plan, your business plan, and get you to repeat all this stuff over and over and over and over again. As you can see, this only takes 1 week, 2 weeks, 3 weeks, 4 weeks, and then 5 and 6. So a month and a half you get taught, and then a month and a half you just rinse and repeat and build your trade plan and your risk profile and what systems you're going to trade. And we help you with that. So yeah.
There you go. He said, I will join you guys in January. See you then, bro.
And so if you join now, like I'll let Pocket, you explain how you're doing that to all the people who are joining.
Sure.
You still there?
So anybody that joins now, you're going to it's going to look like you get charged $1, but you don't. It's just a placeholder to make sure your credit card works. And then we will let you in probably the first week of December, I'm expecting. You'll have access to all of the previous classes, like not this class, but last class's videos to get you oriented. If you want to get ahead of the game, if you want to get a little bit of knowledge built up beforehand, you'll have that ability to do that. I think that's hugely important to help with the learning curve as you go through it. So I think it's really, really good to take advantage of that opportunity to you guys. And then we'll start in January. And you'll be accepted when you get
that $1 like seven more times.
Yeah, no kidding. Everybody gets that. Oh, also the other little tidbit to know is if you're already in the Discord, there's a stupid error that Watt throws up to you saying the link is invalid. It's not actually invalid. You're already in the Discord. You're fine. So those two things are my biggest questions that get asked every time, but it is what it is. But it's a blast. I'm going through it for whatever the fourth time right now, I think, and I still learn something new. It's an amazing value. So, and we have an afternoon session where we go through stuff. Like, go ahead. Sorry.
That's another thing too. Is when you guys go through the boot camp, if you join the pack, you can do the boot camp again. Like if you're, because some of the people, that's what they do. Is if they're like, oh my, like I got a good foundational understanding now, but I need to fill some gaps here or there, or maybe I want to just repeat it one more time to do it again. But now I can watch you all trade live while going through it. That's another benefit of what the pack is about, is you can now graduate, join the group, and then retake it as many times as you want without having to repay.
Yep. And that we have definitely people doing, because like some people are like, they understand, they come at us like Midnight Master, like masking. They came at us already knowing how they want to trade. And the boot camp just helped them learn how to build a risk profile or to understand proper expectation targeting. Right. So they hit the ground running after the boot camp, right? The younger trader who's never achieved profitability or consistency, right? They typically are just like blown away. They're slowly building their trade plan, but then they take it again as they continue to improve the performance. Because remember, like, and this needs to be known, like my job is to get you from unfamiliar to familiar. The exercises I have you do gets you from familiar to proficient. But the only thing that can get you, no matter where you go or who you talk to, that can get you from proficient to mastery, which is the compounding growth phase of trading, is you executing the same way in a live market and making the decisions on your own by yourself. So that's kind of like what the last month and a half is for as well.
Yeah, we got a really good question here about Ollie. And yes, like if you guys are watching this and you're just like, what the heck are these people talking about? Everything we talk about, everything. We're not just saying this as a marketing stunt. Every single thing that you've seen that we talked about today, the terminology, the moves, the statistics, the why, you go through all that. Literally, that's why it's 3 months. Phase 1, the first month, is just to give you a foundational understanding of everything we do. Then phase 2 is applying it. Then phase 3 is building a business plan to apply it. That's it. So absolutely.
Yep. Like I have an army buddy. I have an army buddy who's never looked at a candlestick chart, who's going through the boot camp right now. He's never traded a day in his life, and he's understanding it from a very basic understanding as well.
So we just took, if you guys are seeing here, I drew it out so you all could still listen but visually see. We took the Q1 high in Q3. So now, from a statistical standpoint, how do we align statistics with live price? Live price is number one. Let's break down everything. Live price has been accepted above market open. Number two, live price has been accepted above the 945, which is either the common reversal or continuation area. Number three, we traded an in-stat high of day that we made at 935 with an out-of-stat high of day. So now, how do we orientate all this? Well, if now this is the second highest statistic of how an hourly candle is formed, meaning you see how I split this into 4 pieces? The first quarter or the first piece of the 4, more often than not, will have a high or low for the rest of the hourly candle, or if it's a 4-hour, doesn't matter. It can be with whatever time horizon can be split into 4 even times of segments of time. So because we took the Q1 high right here, this has now been the final icing on the cake that I need. So how does this apply even with taking a trade or holding a trade? I now have even more confidence that I don't have to, if I was an emotional trader, if I was somebody with, a habit of over-managing my trade, being scared of losing my trade, watching the trade go back against me or anything like that, I know that I'm on the right side of what historically does the same thing. So now I know that if we're potentially making a 3-hour line where we make a low in the 9 o'clock hour and a high in the 11 o'clock hour, I know I'm in the body or the middle of that movement. And so now all I got to do is take my hands off this stupid little button, this stupid little mouse right here, let live price do whatever it wants to do. And then if I know that now that's the final confirmation I need for a potential bullish hourly candle, I'm on the right side of live price. I'm on the right side of how statistically we can create the lows and the highs of this hour. I'm on the right side of potentially a new high of day still being due by noon, if not market close, like what Mickey was telling you guys. So now I know that everything is aligned. Live price, statistics, and then my final exit can be based on statistics of going into the 11 o'clock hour. If we take the 10 o'clock high, it'll be a 0.01% off the 10 o'clock high of whatever high we make. And that's everything. That's a rundown of everything. We probably will be wrapping it up here. I don't know, Mickey, should we just sit here and see how this trade goes, or should we? What do you think?
Yeah, we should. I think we should wrap it up. I got a meeting at 11 anyway. I say we wrap it up right here, right now. I got a meeting at 11.
Okay, cool. Because we got in the pack trade group, we trade. We don't just do what we do here. So we trade live. So Bowie actually does his live sessions. If you guys want to go watch the replay to London, he comes up here on the channel and streams his live London trading for Monday for free now, and then he does it with the pack Tuesday through Friday. You guys get to see in the pack. We do the Magic Hour with Carl, Eldianis, and Drez. Then we have our session, Mickey and I. Then we have the Ambiguous Hour, which is right now, which is PTFX and Cody. Then we have the boot camp session, the PM session with Justin, and then the boot camp members to practice what they preach over live price. And then we have the re-engineering session. Right now, it's just for the members in the pack. After we graduate this phase 3, it'll be moved to the free side again, where if you guys are just listening in, you can watch what we do for about a month, where we do the re-engineering sessions and we just go through the day. We just re-engineer the day with, you know, what happened and what was the common sense areas, what was the frustrating areas, all the in between. We just recap the day. And yeah, that's it. So I'm good if you're good. Mick, you got any final thoughts?
Just make sure you take this from an approach of abundance. Take your time, you get the rest of your life, but then like do what's going to fit your business model for your trading, right? Remember, this isn't a cool speculative sport, right? This is an actual business that is going to feed you or take away from you, your family, as you go through and do this. So don't do what all the cool kids are doing. Do the stuff that you can confidently stay disciplined to. All right, that's it. And that makes business sense.
Absolutely. Couldn't agree more. We got J Camp says, you won't be charged until boot camp. Yes, exact what Justin said. Please, if you guys want to join, please listen to this very crucial part. We get so many tickets, customer support tickets for. You will be charged $1. It's just, you will get it refunded to you. It's just making sure you have a valid card, but you will get charged $1. But then you won't be charged the full amount until you get accepted into the boot camp. Now we're going to do it early. So anybody that joins the wait list, you will be accepted come December, I think it is, Justin, right? And
Correct.
that's big.
And we're in December, very early.
So that's only so that way you have the entire month of December and the holidays to obviously people work a little bit less. Some people work more, but generally you got a little bit more spare time, right? So you got a whole month where we have just education material to get you started. So that way you can just hit the ground running, the terminology, the basics, all that stuff. So that way we set you up for success so that if you want to start day 1 of January, you can. But for the people that are super motivated and want to understand every aspect and ounce of what we do, you can hit the ground running for all the hard chargers and motivated people out there. With all that stuff to be said, though, guys, I think what I'm going to do, because this is pretty cool, I love documenting these trades live for you guys, is I'm going to shut up and I'm going to be stepping away and hopping into the pack. So if you're in the pack, Ambiguous Hour starting here right now, join the Discord. And I'm just going to turn some music on and you guys can watch me manage this trade. So with all that being said, I hope you guys have a wonderful, wonderful rest of your day. Wingo, I'm excited to see you go through the boot camp, especially after I think we hopped on a call at the beginning of this year, bro. So I hope you join and find value from it. As always, stay grinding on your freaking goals, ladies and gentlemen. This is the one profession, I swear, it gives me goosebumps every single day I get to do this with super cool, like-minded people. Stay grinding your goals and never let anyone tell you that you can't do something. They never, ever, ever. Hold on. January. Ollie. January. Never let anyone tell you that you can't do something they never done themselves. And I'll see you all later. Bye, everybody. Be safe.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women, you losing. Do this shit for yourself. Spitting with a vengeance, no repentance, and it's for my descendants. Don't be out here in these trenches, cause these trenches turn to ditches, and these ditches turn to prisons, and you lose your independence. But I can't lie, it's all stupendous. Running wild and sipping Guinness in the cup with all the misfits. I just made a few of them some millionaires. I had to burn a few of them, they didn't care. I had to earn a few of them some clientele. But still we broke the bank, so don't you dare tryna knock me on my path against foul, no rap. Knew this life was hard, so I'm taking no steps. While I'm light years ahead of you and I fear no death. But I'm far from invisible, if not hold that, hold that, hold that, hold that, hold that. Keep on going, even though my pain shows I'm focused, even though the flames glow I'm frozen, I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames glow I'm frozen, I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames glow I'm frozen, I be burning all day and I keep on. Keep my head high and I keep on going, even though my pain shows I'm focused, even though the flames glow I'm frozen, I be burning all day and I keep on.
Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. joking. I'm not 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 joking. Right. I'm not joking. 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 I will not die sober. I will not die sober. I will not die sober. I'm not joking. I will not die sober. I'm not joking. I will not die sober. I'm not joking. Right. I'm not joking. I'm not joking. I'm not joking. I will not die sober. I will not die sober. I will not die sober. I'm not joking. Right. I'm not joking. I'm not joking. I will not die sober. I'm not joking. I'm not joking. I'm not joking. I will not die sober. I'm not joking. 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 I'm not joking.
They not like us, and they know that. They not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women, you losing. Do this shit for yourself. I do this shit for myself. I do this shit for yourself. I do this shit for myself. They're not like us, and they know that. They're not like us. We ain't gon' do. They're not like us, and they know that. They're not like us. We ain't
thing that can stop me and me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for